Not surprisingly, the recovery in the oil price has given a boost to plenty of oil stocks this year. So I thought we'd take a look at one. Exxon is going to be our focus. A great run from $32 end of October last year, pretty much almost doubling to where we are today. But is there more to come? Or actually, are we going to see it start to falter as concerns still exist about the strength of the economic recovery? I thought ExxonMobil would be an interesting one to look at. Clearly, like with plenty of stocks, hit hard last year with the coronavirus pandemic. The share price more than halving from January into March of last year. A good recovery so far this year, but look at it longer term. I've got this chart going back actually to about 2015, but from the highs in July 2016, it was about $95 a share. It's still a way off that. So as usual in this video, I'll talk a bit about the recent news, the earnings that have come out for ExxonMobil, how it broke a losing streak. Then we'll come back and look at this in a bit more detail and see where the opportunity might be. Hello, I'm David Jones from Capital.com, and I thought the latest stock we take a look at on the channel is oil giant ExxonMobil. Great run this year, in common with plenty of other oil stocks because of the rising price of oil. But how much further has it got to run? So as usual in this video, I'll talk about some of the recent news around ExxonMobil, then we'll jump back onto the platform, take a look at the charts and see what the technicals say. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel and it means we can continue to push out lots of content on different stocks throughout the week. Okay, let's get into it and take a look at ExxonMobil in a bit more detail. So the company was formed in 1999 by the merger of two companies. That's correct, Exxon and Mobil. So we have ExxonMobil. It's now the second largest oil company in the world by market cap. The largest is Saudi Aramco. The latest earnings, first quarter earnings, were good. They beat expectations slightly. So the company delivered profit of $2.7 billion in the first quarter, which translates to earnings of 65 cents a share. So 2.7 billion is a great profit, but in the previous quarter, the company had lost $20 billion. And actually, it had had 4 quarters of losses. So I think it was something of a relief to get these first quarter earnings in and deliver a profit. Clearly, of course, what was going on in the world regarding the coronavirus, the drop in the oil price, clearly hit the likes of Exxon's business over the last 12 months. The company has been under some pressure to shake up its board of directors. It has made some changes, and it's perhaps not surprising, in the age we live in, where we're thinking about changes in energy use, the pressures of on the climate, and also going towards a lower carbon future. So there's been a bit of disagreement, I think, and a bit of pressure from shareholders when it comes to the board. If you're a long-term shareholder of ExxonMobil, it's not been a good 5 years. If we wind the clock back to 2016, May 2016, the share price is down by 30%. It has had a great recovery this year in the short term. The price is up almost 50% year to date, about 45% year to date. But what does this mean? Is this the start of a proper recovery in Exxon? Or actually, is it just a dead cat bounce before the market turns or the share price turns lower still? Let's take a look at the levels to watch, then we'll jump back onto the platform and take a look at the charts. So I think the first hurdle on the upside, it's not far away from where we are now. It's the highs for the year so far, coming in around $64. After that, I think for the next resistance, we'd have to go back November 2019. The highs then in at $73 a share. On the downside, plenty of support left this year. If we did see it start to sell off, for me, the most important first one is around $54.30 from April. But as usual, to put some color on these numbers, let's take a look on the platform and take a look at the charts and the technicals in a bit more detail. I suppose if we were sticking with the long-term view of ExxonMobil, picking up on these highs from July of 2016, so almost 5 years ago now, technically the trend is still down from that view. We've got a few touches on that trend line. The trend line's coming in around $75 a share, which also coincides pretty much with the September 2019 highs. So I think if a longer term technical view may be that what we're seeing is just a correction within this downtrend before it turns lower again. But in the short to medium term, it's still strong. So let's flip things over to a daily chart and have a look. So as usual, I've put a 20-day moving average on here, and it did a pretty good job on the way up from November through to the highs in March. Clearly, the price moving through the moving average is a buy signal. When the price falls below the moving average, that's a sell signal. Because the price has been somewhat sideways since then, it's been a bit choppy, flip-flopping around the moving average. But the latest signal we had off the moving average was right at the beginning of June when the price moved through about $60 a stock, and we have seen it push slightly higher since then. But let's take a look at the RSI down here, this overbought, oversold indicator. I must admit, we're not getting much from this at the moment. We've got to go all the way back to October of 2020 to see the last buy signal when the RSI briefly dipped into oversold. The market, the RSI, went overbought in early May, and that did end up being something of a top for the share price in the short term anyway. So let's jump back and take a look at the price action. And I've put it under that low from April because the share price did push out, albeit briefly, to a fresh recovery high for this trend in May. So arguably that trend is still up. The definition of a trend is higher highs and higher lows, and we do still have that. You know, the latest high was within the last month for the Exxon Mobil share price. So from a technical chartist point of view, the pure approach here would be to be a buyer of dips. I think it's only if it slips back below these April lows, just ahead of $54 a share, do we have to worry that actually the recovery in Exxon Mobil is starting to falter. So it is still positive. I would just be wary of that longer term downtrend that's coming in. Who knows if that's still going to hold? We do have, you can see some old obstacles from early 2020, then back in 2019, coming in from sort of just above $70 a share. So I think in the short to medium term, most chartists will be looking to see if the price can squeeze higher, if we can push above the May highs, we get a breakout again, and perhaps that's the move that starts targeting 70. And then it'd be interesting to take a look at it if it does get up there to see if once again this longer term downtrend comes into play. So it's been a bit of a choppy few months for Exxon Mobil, but that recovery for me from October is still going strong, and really interesting now to see if it can push out to new highs for this trend. That's it for the update. We'll come back to it over the course of the next couple of months and see if the recovery this year has proved to be sustainable. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.